Hey guys, this is Drew with Staggered Equity. We're really excited for the webinar tonight. We're going to be going over some just really great, really core concepts for people who are just getting into real estate. Tonight we're going to have Rob and Reshma actually doing most of the speaking. Both of them are industry experts. They've been in real estate for a long time, over 10 years of experience between the two of them. And I think you're going to get some great information out of it. So without further ado, here's Rob to do the first part of the presentation.
Thank you, Drew, and welcome everybody. Thanks for lending your precious Sunday evening time. And we're very excited to be here and very excited to see you. Today, we're going to talk primarily about a few things. I can get this thing to work. Yeah, so first I'd like to introduce, I see a few new faces, so introduce Staggered Equity, who we are, what we do. Then we're going to talk about the real estate investors. You know who they are, what form, shape, size, investment grade they fall into, and how do these investors find assets that are worth investing both their time, energy, and money. And then we'll try to debunk some of the top myths about reinvesting, and you might want to look at this very carefully because Reshma is going to explain to you, what some of the myths are, and make sure that you are not going after or believing in those myths. And then we'll open up for questions finally. So just to introduce ourselves, you see the pretty picture of our Charlotte skyline. This is where Staggered Equity was born. And our vision is twofold. Reshma and I founded this company to provide affordable and standard housing, to make real estate investment opportunity available and accessible to many in our communities. And especially we're targeting communities that do not already have access to this type of information, knowledge, and access to the opportunity. So we're committed to generating generational wealth through real estate investing. And to do that, like any other large, significant work, it needs a lot of people and networking with experienced realtors, property managers. We have marketing team, we have legal, and we cover all of those. And very happy to build partnerships. And if you are one of those, reach out. We're happy to talk to you. What we really do is we look at properties, and we're in single family, multifamily. We try to find steady income, but most importantly, upside potential. We underwrite deals. We manage the properties. We increase value through, any opportunities we find. We have keen eye. We have a very good team. We try to ensure highest total return to the investors. We then try to, capitalize on the upside by timing our investment exit to where it returns maximum value. How we do it? We purchase properties, like I said, where we have the value-add opportunities. We're financing, renovation. We're financing other, purchase. We're financing a lot of things. Whatever we can finance, we'll finance it because essentially it's leveraging and try to, reduce the equity base. Over time, no secrets here, right? You find a property, you see what the upside is. Maybe it's underperforming. For whatever reason, it's underperforming. You have to have the confidence and you have the ability to make sure that the property performs once it's in your portfolio. And that's what we do. And then finally, again, when the opportunity is right for a significant return boost, we'll exit. We'll sell the property or we'll refinance it. We have close to $10 million asset under management, approximately 200 units we manage. We underwrite a lot of deals, but we only are successful in a few. We offer on a few, maybe successful in even less than that. Here's a general location of where we are currently. We're growing, and we want everybody here to be part of that growth strategy. So who are real estate investors? You may wonder, can I invest in? I've talked to many people, many of you, many others who said oh, I have XYZ dollars. Am I an investor? Can I be an investor? What can I do? Right? Bonus time coming. What do you do with that bonus that you get? So ladies and gentlemen, the real estate investors are plentiful. They're everywhere. You've heard of the names: Warren Buffett, Donald Trump. All of these built their wealth and fortune through real estate investing. There's Hilton. Whoever rented you your first house, or whoever you bought your house from, those are obvious investors. And now that you're here, I hope you are the next real estate investor. And then, one of the things is you have to have the investment goal. What's your goal? And then what's your vehicle? There are different goals, different vehicles that you can invest, different methods you can invest in. For example, you can just buy one property, two properties, single family. You can invest in multifamily, you can buy it outright, or you can collaborate with some others. There are commercial real estates like the office buildings or strip malls. And there are public REITs. You can buy shares of like warehouses and other real estate investment trusts. That's what REIT stands for. Or investors can be syndicators, which is what we are here all aspire to do. Reshma and I were planning to do syndication. We've already started on that journey, along with others that we collaborate with. There are rules of engagement and syndication, and that's what we'll talk a little bit more. And with that, I'll pass it along to Reshma to discuss what are some of the rules of engagement and what are some of the constraints, conditions, and regulations. Reshma, mic is yours.
Thank you, Rob. So, hello, everyone. Namaste, and thank you for joining us this late night on Sunday, or some maybe early evening this Sunday. So today we'll be talking a little bit about 506B and 506C. What are those? How a syndication deal is structured by 506B and 506C. Okay, and some of you might be familiar with these terms, have already invested in syndication deals. Some might be very new to this, but like we say, we're always here. Reach out to us through our website, our messenger, anywhere, and we are happy to help, happy to explain any questions you have. So 506B, right? So in 506B, if a deal is advertised as 506B, what it means is it will allow us to raise unlimited amount of capital, but we will need to have pre-existing relationship with the investors. What benefit does this give to you is that you do not need to be an aggregated investor, and I will go over it in a few minutes, but you will not have to be aggregated to invest in 506B. We will not be allowed to advertise this deal except for those who already know us and we know them. So there is no solicitation in 506B. However, in 506C, there is no limitation on how much solicitation we can do. And let me give you a little bit of a history on this, okay? So some of you might already know that mortgage rates today are very high unless you live under the rock, right? But this wasn't always the case. So when in 1930s, when FHA was established and mortgages were born, before FHA, people used to make 50% down for 3 to 5 years loan to buy their house. So government stepped in and said, hey, we want more Americans to own the houses, hence we will define new loan terms, like 20 years of mortgages. You will be able to get houses for 20% down, and FHA was born. So likewise, in 1980s, when most of the troops were coming home, they introduced VA loan, which allowed veterans to get loan for 0% down and from federally approved agencies and banks. So that improved, amount of home that people own in the United States. Amount of homeowners just boomed after that, right? So the regulations are always keep changing, that they're always helping people so that they invest more in real estate. So by those changes in 2012, 2013 timeframe, 506 deals are now allowed to be solicited. So you can advertise on TV, on Facebook, social media of any kind. So people were more aware about these investments, not as much as stocks and bonds and whatnot, but still like more than ever that these, syndication deals are coming forward and more people have more people are now able to invest in these. However, there was some misconception that people will just pick up the phone and call the number and boom, they can invest. That really wasn't the case, right? So it's not really like buying stocks. What happened was mostly people were very disappointed that they had to be aggregated investors to invest in these deals, and they might not be in that position. What is an aggregate investor? So aggregate investors are those who have at least $1 million in net worth without their primary residence, at least have $200,000 in annual income as personal, if this is one person, or $300,000 in household income, and they foresee that they will keep having that income in like future years, right? So those are called aggregated investors. But when they called these ads, they found out that they're not able to invest in these deals, which turned down a lot of people from investing in real estate syndication. But maybe they did not know that there's 506B deals, which will allow them to invest in real estate without being aggregated. So all they have to do is they have to be a sophisticated investors, which means that they should be able to analyze finances, know the market, and know the risk that comes with every investment. So, that's how 506B and 506C is different, and why real estate is known as a relationship game is because there are people who wants to give opportunity to everybody, not just aggregated investors, and 506B allows them to do so. And I'm by no means an attorney. So, these are something that we have learned over time. For more details, do reach out to real estate attorney and syndication attorney, and you will, there's like tons of pages of documents about it, and I'm sure you'll get to learn more. So a little bit about how we find the deals and how we qualify the deals. Doesn't matter if it's 506B or C. So uh, we look at like hundreds of deals, right? So it's our major amount of time goes on analyzing the deals and underwriting the deals. So what we do is we make relationship with brokers, wholesalers. We call the property owners to find out if they want to sell their property. And if it's priced right, the main hurdles that we have need to pass. The numbers should make sense. And the goal of our investors should meet with the investments that we have. So that's how we qualify the deals. And once we do that, we will present the deals to our investors, whoever are interested in investing. However, tonight is not the night. We do not have any deals for you to present, but we hopefully soon we'll have one. We are currently underwriting deals, and but like we said, we are very picky about what we choose, and we just want to be 110% sure that what we invest in makes sense to you and for everybody who's invested with us. So a little bit about, just like fun topic for me and a lot of myths that people hear about real estate. I'm sure everybody can see the screen and read the board, but um, I just like the fact that how these things are like, carried over generation to generations, and everybody would just believe in these things without really understanding real estate because maybe because they just not have that time or source to get the education on how real estate works, right? So the first one and the really big one is that you really, really need a big capital to invest in real estate. Let me tell you, that is absolutely not true, right? It just cannot be like, it just cannot be true because everybody who owns home and here knows that today government has introduced plans who can like which will allow you to buy your primary for 5% down, right? So that's the first thing that makes this statement so untrue. And the second thing is in syndications deal, the syndicators or the general partners really decide what is the minimum amount can be and how much you can invest. And yes, there is SEC regulations to it, but you really don't need, like you don't need like 50% down payment for apartments, 25%. Among that 25%, it is broken down into small pieces or stock or shares, I must say, and you are able to buy those shares according to your capabilities. So you really don't need a big chunk of money to get started, right? And it's some people say that it's a timing, the timing of the market is so important to invest.
What we say, and if you talk to any professional in real estate, then it will tell you that the deal has to be right. It should cash flow, it should mitigate the risk, you
Risk. You
should
should
underwrite the
underwrite the
deals
deals
properly.
properly.
And if
And
it
if it
meets your
meets your
goal,
goal,
there is
there
no
is
such
no
thing
such
as
thing as
buying,
buying, or
waiting to
waiting
buy
to
real
buy
estate.
real
You
estate. You
should,
should,
buy real
buy real
estate
estate
and
and
wait,
wait,
not
not
wait to
wait to
buy
buy
real
real
estate. So
estate. So
there's no
there's no
such
such
thing
thing
as
as
perfect
perfect
timing.
timing.
Buying
Buying
properties
properties
in
in
cities
cities
is
is
more
more
attractive,
attractive,
but
but
not
not
always
always
necessary.
necessary.
You
You
would
would
know
know
if
if
you
you
go to
go to
suburbs
suburbs
where
where
housing is
housing is
really
really
low
low
and
and
demand is
demand is
super
super
high. If
high.
you
If you
build or
build or
buy
buy
apartments or
apartments or
houses
houses
there,
there,
and
and
I
I
kid you
kid you
not, like
not,
I
like
have
I
a
have
house
a
in
house in
Littleton
Littleton
that's like
that's like
outskirts of
outskirts of
Charlotte, and
Charlotte, and
I
I
get
get
more
more
application for
application for
that
that
house
house
than I
than
get
I
in
get in
Charlotte,
Charlotte,
because in
because in
Charlotte
Charlotte
there's
there's
pretty
pretty
much
much
supply
supply
meets
meets
demand,
demand,
not
not
as
as
much, but
much, but
more
more
than
than
in
in
suburbs.
suburbs.
So
So
it's
it's
not
not
true that
true
you
that
need
you
to
need to
buy
buy
properties
properties
only in
only in
cities
cities
to
to
fully
fully
up to
up
get
to
more
get more
occupancy. It's
occupancy.
more
It's more
about
about
jobs and
jobs and
different
different
other
other
factors,
factors,
immigration and
immigration
all
and
that
all that
stuff,
stuff,
right?
right?
So,
So,
and
and
fixer
fixer
upper
upper
is
is
easy.
easy.
Wasn't for
Wasn't for
me. Like
me.
I
Like I
had
had
horrible
horrible
experience
experience
and
and
horror
horror
stories
stories
with
with
contractors.
contractors.
So
So
it
it
wasn't for
wasn't for
me.
me.
But
But
yeah,
yeah,
I
I
guess for
guess
a
for
few
a
it
few it
might,
might,
but
but
it
it
does
does
not.
not.
It's not
It's
like
not
what
like
we
what we
show on
show on
TV.
TV.
Like
Is
you
like you
break the
break the
wall,
wall,
then you
you
sell the
sell the
house for
house for
double.
double.
That
That
might
might
not
not
exactly
exactly
be
be
true,
true,
right?
right?
And you do
You
not
do not
have to
have to
own a
own a
home
home
before you
before you
invest in
invest
it,
in it,
especially
especially
for
for
people
people who
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 have
have
joined
joined
us
us
from
from
California
California
or
or
New
New
York,
York,
who
who
thinks
thinks
that,
that,
well, I'm
well,
not
I'm
a
not a
homeowner
homeowner
yet.
yet.
Should
Should
I
I
invest in
invest in
properties? You
properties?
should
You should
absolutely
absolutely
invest. You
invest.
don't
You
have
don't
to be
have
a
to be a
homeowner.
homeowner.
You know,
You know,
commercial real
commercial real
estate
estate
and
and
residential real
residential
estate
real
is
estate is
quite
quite
different.
different.
So
So
you
you
don't
don't
really
really
have
have
to
to
own a
own a
home or
home or
have the
have an
experience
experience
of
of
that
that
sort.
sort.
So
So,
is
is
being a
being a
landlord
landlord
time
time
consuming?
consuming?
It
It
can
can
be,
be,
but it
but
does
it
not
does not
have to
have
be,
to be,
because
because
there
there
is
is
ways to
ways
own
to
real
own real
estate
estate
by being
by being
passive.
passive.
Like
Like
syndication is
syndication
one
is
of
one
them.
of
If
them.
you
If
are
you
a
are a
limited
limited
partner,
partner,
it's a
it's a
mailbox
mailbox
money,
money,
and
and
your
your
time
time
is
is
only
only
spent during
spent
the
during
due
the due
diligence
diligence
period,
period.
not after that, right? And is real estate investment high risk asset? It is a risk asset because every investment has its own risk. However, it is real asset. So you can go check out the apartments that there is. You can look at the numbers. You can change things if things change in the market. Unlike a
Unlike a
lot of
lot of
other
other
things that
things
we
that we
know, what's
know,
going
what's
on with
going
the
on with the
cryptocurrency
cryptocurrency
today, the
today and
stock
stock
market
market
today,
today,
it
it
is
is
less
less
likely
likely
that
that
you
you
will
will
lose
lose
everything that
everything
you
that you
have
have
in real
in real
estate
estate
than
than
anywhere
anywhere
else.
else.
However,
However,
I
I
should
should
mention
mention
that
that
liquidity in
liquidity
real
in real
estate
estate
is
is
low.
low.
So,
So,
there
there
is
is
risk
risk
where
where
you might
you
not
might
be
not
able
be
to
able to
sell the
sell the
property,
property,
like
like
you
you
sell
sell
stocks
stocks
or
or
gold
gold
or
or
anything of
anything of
that
that
nature.
nature. But
Yes,
yes,
real
real
estate
estate
is risk
is risk
asset,
asset, but
but not a
not
high
a high
risk
risk
as
as
how
how
people
people
would
would
think
think
they
they
are.
are.
Okay,
Okay,
and
and
real
real
estate
estate
is
is
definitely
definitely
not
not
what you
what
see
you
on
see on
TV,
TV,
and do
and do
not
not
expect
expect
to
to
go
go
into
into
real
real
estate
estate
and
and
knock the
knock the
wall
wall
off
off
and
and
bring
bring
big
like big
hammers
hammers
and
and
make
make
double the
double the
money. You
money. You
really
really
need
need
education.
education.
Education
Education
is
is
power.
power.
If
If
you
you
really
really
have to have
have
passion for
passion for
it,
it,
you really
you really
need to
need to
network,
network,
know
know
people if
people
you're
if you're
trying to
trying
do
to do
anything
anything
around
around
there.
there.
In real
In real
estate
estate,
especially,
especially,
right?
right?
So
So,
yeah,
yeah,
those
those
are
are
some
some
fun
fun
myths
myths
that we
that we
have
have
on real
on real
estate,
estate,
and I'm
and
sure
I'm
there's
sure there's
more.
more.
Like
like
let me
let me
know if
know if
there
there
is
is
anything
anything
that
that you want to add to the list, and we make sure that we'll bring it to our next webinar. But right now, I guess it's time for questions. I'm sure there's a lot of them, and Prab is here to answer any questions we have. Drew will be able to unmute you if you want to ask your questions, or if you want to type in your questions, feel free to do so as well. All right, thank you everyone again for joining, and I'll invite Rob here so that he can answer your questions.